Record to the call. Okay, sorry guys, we're back with a simple. His, I had a friend who had a Norton motorcycle, and for the 2 or 3 days a month when it worked, it was the best machine going. And I think StreamYard is or Riverside is one of those things. It's not a Honda. It's anyway. So now we're back. So, Bryce, tell me about
Yes.
what problem you've raised a community fund in partnership
Yeah.
with WeFunder that could be a model that's replicable nationally. Every place someone wants to stand in the role that you're in. Uh, with Access Ventures there in Louisville, Kentucky. Tell me what problem you're trying to solve.
Well, we're trying to solve the critical access to capital issue
Mm-hmm.
that many entrepreneurs face. I mean, all the statistics. 1% of companies raise venture, 78% of
Mm-hmm.
capital goes to three places. So
Right.
most communities look like Louisville, Kentucky. And
Mm-hmm.
so entrepreneurs that have great ideas are having a harder and harder time with finding capital. So with contraction of banks, with the markets that we've seen over the last several years, and then you also, on the other side of that, investors, historically, we have this draconian policy that only allows for high net worth individuals that are actually savvy enough, quote unquote, to make investments. And what does it look like for regular citizens to actually know what they're thinking and talking about and to participate in supporting businesses they care about and be able to actually have that win-win where if this company is able to go on and have a successful exit, that their customers can participate in that. And we wanted to kind of introduce that. That's been possible since 2016 with the Jobs Act. But again, in places like Louisville, Kentucky, community rounds or crowdfunding hasn't really been that well known about or received. People associated with things like Indiegogo and Kickstarter, which have very specific purposes. But when you're raising capital and you're thinking about where do I go? Most people just think I go to institutional investors. That's where I
Mm.
have to go. What we wanted to say, hey, go to institutional investors, but also go to your customers, go to your family, go to your friends, go to your community members that actually know you, know that your business is viable, really care about the success of your business, and ask them to support this through an investment. So that was part of it, was to kind of use this as a way to educate the community around what these community rounds were, and to
Right.
get on both entrepreneurs, investors, and the community excited about kind of this new way of thinking about
Right.
capital deployment. So
But you've also stepped in with the $20,000 match. That's the really innovative. When they list out the powers that be, the four elements of catalytic capital,
mhm.
it's willing to take a risk, going in early, being flexible, and you do all three of those. And then this is not concessionary, but that still, why is that $20,000 match crucial, and why is that something that other people who in communities and community foundations could replicate?
Yeah, SBA statistics show the average business needs about $30,000 to start. And so that number was critical for us. If you could mobilize your community, your friends, your family, your customers to invest and support your business with $20,000, that was a good enough indicator for us to kind of get you over that hump, to
Mm-hmm.
unlock that critical capital you need. We've also seen entrepreneurs leverage it with match funds from state dollars and get really creative. It's been really exciting to see how entrepreneurs have embraced this. It's also mobilized investors. In 2020, when we started this, there were less than 200 people that had participated in some form of crowdfunding to support businesses, and now there's over 2,000. And so it's really
And that's
galvanized
in the
people say,
Louisville area you're
it's
talking
just
about.
well, that's actually across the state of Kentucky,
Okay.
because the other cool thing is it's inspired other people to look at this. A friend of mine is doing work in southeastern Kentucky, a really rural, hard hit area, Harlan County, and there was a brewery he was working with that needed to raise capital, and they went on to raise, I think it was $240,000 from
Mm.
their community. People, they're like, yeah, I
Mm-hmm.
want a brewery in my
Right.
community,
Right.
and they would never have pursued that because they didn't even know it existed. And so that was
Right.
part of the magic of the match, was to really inspire the community, and to answer and debunk some of those myths that they had started to kind of believe around community rounds.
So I've read your manual. And,
Yeah.
WeFunder is national, can pop up anywhere locally, but you're the local anchor that suddenly validates somebody who gets $20,000 from their community to suddenly reach the SBA level of above 30. You can maybe really launch a business. But you also talk about wanting to replicate that role you're playing, and that's a good role for a community foundation. Can you tell me more about why that role, who should play it, and how much sense would it make to replicate this? What ecosystem would you need to have an organization replicate Access Ventures' role to do this match that validates the whole ecosystem?
Yeah, I think community foundations, I think regional economic development kind of organizations that are kind of mandated with kind of spurring activity in economic
Mm-hmm.
development. I think state governments, one of the things we did was also institute like this policy design sprint for entrepreneurs. And one of the ideas that came out was to expand the WeFunder match to support any low income zip codes across the Commonwealth. And
Wow.
that is a role of government, and they actually have a
Right.
hard time deploying those dollars.
Oh,
In the
they
state of
do. Yeah.
Kentucky, we have $15 million annually that's allocated towards entrepreneurs. And what would it look like to leverage the power of technology to expand this across the state? So now that I'm not limited to just, 3 counties. I can actually expand this, and now the state can go and fund
Mm-hmm.
entrepreneurs, Black and brown founders in lower
Right.
income communities or rural entrepreneurs that are
In
also
a lot of
struggling.
those, the poorest zip codes, $20,000 is beyond their reach very often.
It's huge. Yeah.
Yeah, and so how do you get the first 20,000 in those zip codes where friends and family don't have enough for a Kiva fund? I mean, in the communities I've worked with, in Cincinnati with the Mortar Accelerator, and with Oakland and the Upton Accelerator, those entrepreneurs didn't have 25 friends with $25 to get up on the Kiva platform. So how do you get the 10,000 in these zip codes without assets? Kiva is wonderful if you're in a zip code where you have 25 friends with $25. A lot of zip codes, Kiva doesn't work at all.
Yeah.
So
Well,
how
that's
do
where
you,
we
how do you
see
get that money in?
that's where we look at it more as one part of the capital stack.
Yeah.
And so I would 100% agree, which is why when we launched Render Capital, for example, WeFunder was one rung on the ladder. And then we also
Right.
do grants of up to $5,000 to Black and brown founders specifically, because, the previous work with Kiva, we recognize that. So those are still going to be hurdles. And that's where I think it
Right.
needs to be a product, a solution that a regional economic development authority, a community
Right.
foundation, an investment group, is actually deploying as a part of its strategy. I think
Right.
I'd love to elevate the conversation to what does an ecosystem need from an investment strategy versus
Right.
this conversation we always have around, more narrowly defined funds. I think
Mm.
everybody kind of gravitates towards like this venture fund, but
Mm.
how many companies located in Louisville, Kentucky are going to actually get investment from a traditional venture fund? A
Right.
couple.
Right.
Right. And so I think we need to, if we really care about place and community, we've got to look at a strategy that encompasses a more holistic
Right. So
capital.
so it doesn't solve everything, and that's fine.
It's
I
not
mean,
going to solve everything.
yeah, they're
I would add
yeah.
a couple of things to what Bryce said to that question, which is a really good one. One is, yeah, it doesn't solve everything. I would say that might just not be a good fit for
Right.
WeFunder or Akiva, or a kind of online crowdfunding model. And that's okay. Like, WeFunder or Kiva can't solve everyone. There should be kind of
Right.
different kind of groups and organizations and programs to target different kind of customer segments, if you will. The
Sure.
second thing though is like you can get help, right? Like so it could be that like Amplify is an organization in Louisville that helps entrepreneurs, and it could be
Right.
that like if Amplify has an email list, if they really believe in a founder in a low-income zip code of Louisville, then Amplify as a partner. I think Amplify is a nonprofit, Bryce. You know,
Yeah.
like they can help that
Right.
entrepreneur get to that 20K level, and so they can get help from the community of people around, and it
Right.
doesn't need to be
Right.
entirely on them.
Right. So it doesn't solve it. Let's go into who this is for then.
Yeah.
Where should you be in revenue? Where should you be in social capital to make this work?
John, it's probably a good question. I mean, you guys look at this across the country. What does WeFunder look for whenever in relation to revenue and social capital for successful campaigns?
Yeah, I mean, there's no real hard criteria here. We certainly do a bunch of, investments into pre-revenue companies, pre-launch companies like Idea in a Garage. Um, I think the sweet spot for WeFunder and community rounds is, a company, a B2C company that is in market with thousands of customers. And, then when you send an email and say, hey, you dear customers who already love our products and our brand and our
Right.
mission, would you like to invest and become a financial stakeholder in our business? Here's the link to our community round
Right.
page. That's the absolute kind of ideal customer profile sweet spot. And so, Substack is probably one of the best examples. Like, had raised 50 million from VCs, had millions of users, sent one email to their user base and raised $5 million in 24 hours, right? So that's kind of the
Right.
extreme end. But, Harlan County is a good example. Like, a brewery that's coming to Harlan County. I think, what did they raise? Like 200 grand or something from a few hundred kind of local people in Harlan County. And yeah, there's no real kind of lower band.
Right.
But, if you don't have that community, if you don't have that customer base, user base, it's going to be a little bit more work on the part of the entrepreneur to hit up their network and go to their LinkedIn connections, or, kind of organize a meetup in person.
Sure.
And invite people,
Right.
But yeah, it can be B2B, it can be biotech companies that don't have a kind of consumer facing audience. It can be kind of pre-launch, pre-revenue. There's no kind of minimum bar. But having said that, the real sweet spot is B2C, and like the more customers you have, the easier it's going to be for you to kind of raise that capital.
Yeah.
And in your thank you. Go ahead.
The only thing to point out too with community rounds, a lot of times people hear it's crowdfunded equity, but 30% of the deals are, traditional debt or revenue-based financing.
Right.
What the other power is, it allows the entrepreneur to say, what type of capital do I need for my growth? So I really like that. And we've seen
and you can do revenue share on WeFunder now, right?
You can. Yeah.
Yeah.
So that's been really good to introduce different types of capital. But again, it's not going to be for every entrepreneur.
Right. Sure. But in your manual, and because you want to replicate this, what role do you call that? Just the community capital role that Access is playing, that Render is playing?
Yeah, in a sense.
Yeah. So you said really decide on the purpose of that capital, that those are the questions to ask first. So when we just did our conference in San Antonio, there are one of our big sponsors, the HEB Foundation, big grocery store, and 2 or 3 other local foundations are looking to move to a place-based way of looking at things, because they realize the siloed approach of having sectors, it means that they're really working in 2 or 3 zip codes. Because in most cities, 2 or 3 zip codes are where people die 10 years younger, and that's where all the poor folks are. That's where the sick people are. That's where the capital needs to go. And so they're going to a place-based, but because they have had, we do education, we do housing, we do whatever, and they realize they can't deal with the community's needs, so they're becoming place-based. And so as more foundations, local foundations, that we're doing things in a sector become place-based, so they can do all the needs in the zip codes where there's need. How should they think about replicating that role? They seem to be prospects, and we're finding at Neighborhood Economics, our conferences, that more and more locally based foundations are moving away from a sector focus. We're not doing education, we're doing 39257, whatever. So we can be holistic. How should they think about their capital to ideally replicate your role?
It's a great question. And one of the reasons I talked about, really think about the purpose of the capital is because I think a lot of times you've got to say, if I'm looking for a non-concessionary return, the reason people go sector specific is because I can go and cherry pick the best agricultural technology innovation, right?
Right.
And there's a place for that. But I think it's one of those questions you have to answer. If you're looking for a non-concessionary kind of targeted return, that's going to be tough when you're very place-based, because anytime you geographically bound your investment criteria, your risk goes up and your return potential goes down. You just don't have the density to go out and fill the entire funnel. So you have to ask those sobering questions and answer them around, what do we need this money to do? What are we willing to accept in as it relates to the capital? I do think you can build a match fund that is non-concessionary, that is for a community that is not specific on place even. For example, like you could say, what does it look like? I care about agriculture, or I care about female founders. Those are community.
Right.
And you could then leverage and say, I'm going to support female founders, the best female founders on WeFunder. That's my community. I want to build a match fund there.
Right.
You can easily do that. If you're looking at Louisville, Kentucky, I think that's the best place for some concessionary, place-based PRI dollars that are looking to kind of evergreen and create momentum and be a catalyst for change in that community.
So part of that is the speed of deployment, right, as well. It's like if you want to kind of quickly deploy and catalyze more capital going to startups kind of in the nearer term, like you kind of lean towards the concessionary kind of end of the spectrum. If you're willing to kind of be a little bit more kind of slower in deployment and wait for those like, you know, hotter deals or kind of stronger economic deals, whatever, then, you know, you can, as you say, I totally agree. You can kind of be focused on like, you know,
right. But those are, you've
return.
answered it as if the community foundation is thinking like an investor. And that's not the question I asked. How does a community foundation or a locally based foundation think about playing the matching role that you played to catalyze the ecosystem?
The matching role on the funds themselves, or with
the matching role that Render plays to do a $20,000 match, a $100,000 match, and a $200,000 match. No traditional fund looks at that and says, you know, this is our investment thesis. This is a, as you said in your manual, this is a place for something like a community foundation, something like an economic development agency. How should they think about their capital?
I think they should think about it as a catalyst, as a momentum builder, as a connector and a convener, which is the role of a community foundation. I think they need to, what I would recommend is to look at this as, again, back to a strategy conversation. What does it look like to begin to think about educating the community around this type of capital? So there's some education that could go alongside of that, marketing, also connections with other capital providers. So like what we did with the state. So how do you, and then to Johnny's point on, you know, the Amplify, the entrepreneurial support organizations. I think if you want to play this role, I'd love to see organizations that think a little bit more holistically around where could this go and how do we help catalyze our community, our citizens to get engaged and involved. And that might be through technical assistance and mentorship and also providing capital. And that's why I think a community foundation is a great direction.
Right. And so is that who should be the, if you had, boy, I would love to see this replicated in 5 communities. And we're, as we said, we're inviting you to speak about this, both of you at Neighborhood Economics in Chicago next spring, and with MacArthur Foundation as our anchor for that conference. Date's not set yet. But, and if you could say, you're up on stage, you're talking about the community match, and you're talking about, this is, you know, we'll match you $20,000 if you get to 20,000 with your community. We'll match you $100,000 if you get to 200,000. We'll match you $200,000 if you get to 400,000. And it works really well with, you know, consumer goods with lots of customers. So who would be your ideal, what's the profile, the iconic profile of the 2 to 3 folks that you would love to see? Yes, you should do one. Yes, you should do one. You know, you're Dumbledore up there saying, yes, you fit.
Yeah, I think you're hitting on community foundations. I think play that role. They could create a pooled fund, even with some of their donor advised funds, people that are passionate about local ecosystems. Call it the Chattanooga Fund or the Columbus, Ohio Fund or whatever it is. And it's managed by the community foundation. I think that's the right role for a community foundation. I think a high net worth individual that really built their business, cares about the community, is really interested in legacy and giving back. It's a great way for them to kind of add this into one of their place-based strategies. Again, like you said, it's one solution. I think they need to be thinking about the full stack. But a high net worth individual that really built their business. And then the third, I don't know if we talked about this yet, but I think state governments across the country allocate dollars to support founders, to build economic opportunity and vibrancy. you know, in the state of Kentucky, for example, they allocate $15 million a year to invest in startups. What a perfect strategy for a state that's all about place to actually now use this as a strategy to deploy dollars. Imagine if the state of Kentucky picked this up and it was $1 million a year that went to community rounds to support founders across the Commonwealth. That would, I think, improve access for more founders in kind of hard to reach places. So I think state governments, community foundations, and high net worth that really care about legacy.
Do you find, personally, I found state governments are harder to reach than the regional economic development folks who want to see, we have an 18 county area here in Western North Carolina, and it's easier to reach that money than it is, the money in Durham goes to Durham in North Carolina. They forget about this part of the state.
Yeah. So that's probably another one for sure. Yeah. And I just am not as familiar with those. I don't believe we have a robust regional development authority for our market. So
yeah, we do, because the state doesn't, they forget about us, and that's interesting.
But no, that would be another good one for sure.
Yeah. Are you looking at any kind of, have you got somebody to be ready to adopt this anywhere? I mean, this is a really interesting thing, and I'd sure love to help people figure out how to get engaged around it.
We've been having conversations, Johnny and I both, with different communities, people really intrigued. Nashville, Tennessee, there's some interest. We're actually speaking at a impact table convening there next week, trying to inspire their community. Indianapolis and some others. But
great. Here in Nashville, there is the Chamber of Commerce is raising a fund, and they aren't quite sure what to do with it yet. They've raised $500,000, and they want it to be, vaguely for entrepreneurship. When you have, when that's your investment criteria, you wonder a bit. But I think this is something that might make a really interesting, because they wanted to catalyze the ecosystem. I'd love to introduce you to that guy and his backers and things. I think it's really interesting. Yeah. Have you figured out what's the inflection point? Now, they seem really good because they haven't figured out a thesis, and they've raised some money, and they're trying to figure out what would we do if we were real, right? I mean, which is a phase every fund goes through. It's like, oh, you got some money to walk around and figure out what to do. You need people to give you that believe it, that it should exist money. But have you figured out what's the inflection point where doing this community fund with the guarantee would make sense?
Insofar as like the amount of capital, or
just what phase of formation who should already be the players that are ready for this? Have you figured out that the place where this fits best? As like, we've got a fund that has raised some money and is trying to figure out what to do with it. What other places have you seen really receptiveness?
That's generally where. Yeah, they have a place-based thesis mandate, and they've raised some funds, and they want to support entrepreneurs. Also, I would say, $500,000. When you think about, okay, if we deploy this traditionally, how quickly is that going to run out? And so
they're not looking to deploy that capital; they're raising that money to raise a fund.
Okay, got it.
And then they want to see what fund, where, kind of thing.
Yeah. Yeah, I think for us, what we wanted was a commitment, a capital commitment to say, hey, we know this is going to take at least 3 years to really saturate the market with a little bit more understanding. And it took about, wouldn't you agree, Johnny, about 3 years. Last year, we started to we saw, I think, more than 60% of the deals on the match in the last 12 to 18 months.
Tell me about the progress of education. What did that look like? What did they not get?
Oh, man. Well, I mean, I think if anybody had any familiarity with things like Indiegogo or Kickstarter or GoFundMe, you come in with a felt experience that, we just needed to kind of understand and answer questions on. Those are great platforms, but they have a specific purpose, different from a WeFunder or a Republic or a Honeycomb. And so we need to help people understand the differentiation between Reg CF, a community round, and your traditional crowdfunding campaign. That was one of the biggest hurdles. The other is,
Can you dive down into that a little bit? Like I've given to GoFundMe's, and I've given to some of those other things, Indiegogos. If I know those, how is this different from that, and how is my experience different?
Johnny, you're more well versed there. Why don't you take that one?
Yeah, so GoFundMe is kind of a donations crowdfunding platform, right? So straight up donation. Kickstarter, Indiegogo, or perks-based platforms. So usually you're getting like a discount on a product, or you're getting a t-shirt, but it's kind of a perk, almost like revenue for the entrepreneur. And then you have Kiva, right, where I used to work, which is like a microloan, a 0% interest microloan. I think it's capped at, I don't know what it goes up to these days, 15K maybe. But WeFunder is an investment, right? So that's a big difference. So it's what's called investment crowdfunding, or sometimes equity crowdfunding. But as Bryce mentioned earlier, that's kind of a misnomer because we also have a lot of debt offerings on the platform. The SEC kind of legal nomenclature is regulation crowdfunding, as opposed to Regulation D, which is how most startups raise capital today, which is where you're limited to accredited investors. And so, yeah, through regulation crowdfunding, you can raise up to $5 million per year. And then, you can raise from unaccredited investors as well as accredited investors. Everyone can invest, not just rich people. You can publicly promote it. You can market it on social media and an email blast to your customers on LinkedIn, whatever, in the press, in the local newspaper, whatever it is, Louisville Business Journal or whatever. But that's the big difference versus Kickstarter, is you're offering the chance to invest, whether a loan or equity. And as a result of that, the average Kickstarter raise is about 25K. Average WeFunder raise on the platform is about 400K, and you can raise up to 5 million. The average Kickstarter pledge is $80, 80 on at least last time I checked. Average investment on WeFunder is $1,000. So again, if you say,
where is
hey,
GoFundMe in that?
I would imagine $10 or so. GoFundMe
$10
is like,
or so, did you say?
I would imagine so. I'm totally
I
making
mean,
that number
10,000
up.
or so. Yeah.
Well, oh, sorry. I meant the average in the donation, the average kind of amount raised. I would imagine. I mean, I don't know. Like, I would guess it's kind of less than 5K, but I don't know. I'm making those numbers up on GoFundMe.
Okay.
Yeah.
So they have to say it is investing. Okay, that's one thing. And then, but this is not like just regular. Your match. Tell me about what your match of $20,000 does for folks, and why that point in time makes all the difference.
Well, because these are entrepreneurs in Louisville, Kentucky, where we don't have a ton of institutional investors, and we've got banks that have contracted. And so if you have less than 2 years in business and you don't have collateral, you don't have a personal guarantee, good luck getting a loan from the bank. So if you need debt financing to grow your business, where are you turning to? And if you need investment capital, apart from the 15 million the state allocates, there's not a lot of institutional investors in our market. And so the 20,000 match for someone that's really, early in their journey, an entrepreneurial journey, is critical. That gets them over that hump of saying, I can actually step away from my job. I can focus on this. I've got 40K. I've got $40,000 to at least start this thing. Now, it's not going to be the be all end all, but I think on platform, the companies that we've supported have raised over $5 million collectively. Of that, 1.9 million, almost 2 million, has been on WeFunder. So they're still raising outside capital, raising 2 million, and then our match was 680,000 of that. So you're looking at like how it's catalyzed growth and opportunity.
You've raised put 680,000 into the match. How much of that is $20,000 matches? How much is 100? How much is 200?
The number's closer to 900,000 now deployed. That was back when we first did it. So of the 900, I would say it's probably 50% of that is 50,000 to 200,000. We had one company we matched at 200,000, and then the rest of that's $20,000 checks.
Right. So most of the 900,000 is $20,000 checks that suddenly I've got 40,000. Suddenly I can go 3 to 4 months, hire somebody, see if it really works. Yeah.
Correct.
What's your default rate so far? Have you had any, or?
I haven't, to my knowledge, none of the companies are out of business. So, I mean, we're still early in that indicator. We're, I think, 3 years into the match fund. So I think we're still probably early.
Sure.
to know kind of the
I
full
mean,
life
things
cycle
will hit a
on that.
wall. I mean, some
Yeah.
people will, but that 20.
Hey, your on-paper IRR is probably pretty good, right? Because I'm thinking
Yeah.
of cornbread ham, which is
Cornbread
like
ham, yeah.
I think the largest match, and since
Right. I read about
the
them.
first round, they've like increased valuation. So I mean, it's not realized gains, but I would imagine the on-paper IRR of the fund is actually pretty positive at this stage.
Yeah. Yeah. I haven't looked at it in a while, but yeah, you're probably right.
Okay. But going back to the purpose of the capital, the purpose of the match, and you came to the point again. Did you know that 20 would mean that, the SBA says you need 30, so we're going to match it and get them over the hump? That was your strategy, that we'll get these folks who have that much money over that hump. That was your goal.
That was our goal. Yep.
Yeah, and that seems to have really been proved out.
That piece has, for sure. I mean, the entrepreneurs, like Johnny said, they've raised more than that, and that's been good. Because the other, you asked the question on, what education have we had to do?
Yeah.
There is the education. Other parts of that are, if you've ever experienced Reg CF, anything that's new, it's been around since 2016 with the Jobs Act, and so there's been a lot of changes. So if you came around it in 2016. You experienced it when every single person that invested was on your cap table. Well, those things have been resolved and figured out, and now it's on one line. It's an SPV through WeFunder. So those types of things have been figured out. But if you weren't familiar with that, you're like, oh, I don't want 1,000 people on my cap table.
Right.
So we had to educate people that those things have changed. The other one, you used to only be able to raise $1 million through Reg CF. And in April of 2022, that was changed by the SEC. You can now raise up to 5 million. So actually helping entrepreneurs understand that, like, you're not a lesser than, quote unquote, entrepreneur or company if you turn to the community round. We want them to see this as a viable, exciting part of their capital stack. I raise from institutional, and I also raise from the community. That this is, and we have to have, proof points like Substack. Another famous one that I always point to is Mercury, which is a really successful fintech company. They raised $100 million Series B, led by Andreessen Horowitz, and a year and a half ago they opened up a WeFunder campaign of $5 million in that same round. And so because they wanted their customers to win when they won.
Right.
I mean, a beautiful founder story, right? And I think they oversubscribed on 5 million within 2 hours or something.
Wow, that's amazing.
So what we need to do is educate founders and investors that this is a real way for them to close their capital gap. It's a great way for them to come alongside of already existing institutional dollars and kind of boost their rounds, so to speak. So there's some education that we've had to do around all those things.
Interesting. There's a VC friend of mine who retired, moved here, and who's helping the chamber figure it out. I'm going to hook you up with both David and the young kid from the chamber. I think this is but it seems like the catalytic thing is to do the $20,000 match. That's the thing that causes the flywheel to start turning. Right. So you need to have a few $100,000 set aside for that.
You do.
And then you could find them, direct them to other money, but that money put up that says, I'm going to be willing to take a risk. I'm willing to trust the social capital equals becoming real enough. And there's a level of trust in the middle of that. And you're willing to be flexible. Like if you reach that, there's almost no, the cost of $20,000 a deal due diligence. You just got to say, yeah, you look okay.
Exactly.
Because the cost of deploying that. Johnny, if I hooked you up, and let's just say the situation in Buncombe County, North Carolina, Western North Carolina, Asheville, is ripe, what would be the next steps to hook up our folks or find other folks who are like that? I mean, the Atlanta Community Foundation is a particularly creative community foundation. If you haven't worked with them, they've figured out so many parts of the capital stack where their capital fits in that no other capital fits. And so, they came to Neighborhood Economics, and I connected to them too. But what would be the first thing? I mean, like, hey, here's an intro to Bryce and Johnny, and then what happens next? Because this is really important, and I really want to help it grow. So
that's awesome, man.
Help you grow.
Thank you. Yeah, and thanks for having us on here to talk about this and that kind of generous offer. And yeah, I think basically that's the immediate next step, right? It's like an intro to me and Bryce. I think these things are going to be, this is the first one. Like what Render and Bryce have done in Louisville is literally the first of these matching funds for community rounds like in the country. And so there isn't yet a kind of playbook that's being kind of tested over multiple iterations.
Sure.
I think there's going to be a pretty bespoke approach to this where depending on the situation and like who the partner is and who the funder is and what the kind of needs of the local community are, or maybe it's not a local community, maybe as Bryce was saying earlier, it's female founders or Black founders or, kind of clean energy founders throughout the country. And so it will be a very kind of bespoke. So it's like, okay, let's jump on a call, kind of understand what the kind of objectives are on that spectrum between, okay, are we looking to, maximize financial returns here, or are we looking to quickly catalyze, more capital flowing to startups, and we can be a little more concessionary about it. That's going to depend on, the foundation or the funder. So I think, yeah, the most immediate step is jump on a call. One thing kind of on that point, and one thing we haven't really touched on, and kind of Bryce's thing of like, and your question of like, how do we grow it, right? And how do we kind of get to that inflection point in Louisville? I think like the partner is critical, right? So the fact that Render Capital is a very kind of well-respected VC on the ground in Louisville has really helped to kind of elevate the prestige and the kind of signal of a community round in that community. And so because, like Render is writing checks into companies and founders, oh, well, if Render is blessing this as a VC locally, that's cool. And so I think Bryce and the team at Render, Patrick, have done an incredible job of just basically helping founders locally, good venture backable founders locally, as well as kind of more Main Street businesses who aren't, good for VCs. But helping those venture backable founders see, okay, wow, this is actually relevant for me as well. I can let my customers invest alongside institutional investors like Render. And so kind of who is that local partner on the ground and what is their kind of socialization and kind of promotion and marketing of this concept in the community? Like, how does that work?
And we don't have a local VC here. I mean, a locally focused VC. We have some folks in food systems and things, but that's an interesting.
And it doesn't need to be a VC, right? Like in most places it won't be a VC. This is like one example. Like Render in the Louisville example happened to be a venture capital fund.
Yeah, interesting. We've got a creative CDFI here too, Mountain BizWorks, and they have. Somebody who works with us also works with their Catalyst Fund, which is focused on minority entrepreneurs. And it could be that there's a role there around that. That's interesting. This is a really exciting idea. And what I like about it, and what we're finding in neighborhood economics, is that a lot of these things are working, and then they're ready for replication, right? And so Lanier Richardson at Chicago Trend, he's been with the last 3 conferences, and he's really finding replicable ways to invest in Black Wall Streets, as they're called, strip malls that are in danger of displacement by predatory hedge funds. And he gets in and has the community also engaged with him through some crowdfunding and then other debt, concessionary debt. But it's a really replicable model. He's done it in Chicago a couple times. He's done it in Baltimore, and he's raised about 10 million now. And the foundations are giving him money to replicate because it's a simple, replicable model. And there's a lot of other things around innovative housing solutions. I'll go really quickly. 2 big developers are doing solving workforce housing on church land where the church owns the houses, single family houses, as the landlord and keeps them viable. But then they can be good investments, and it keeps the church viable. But you have a zero cost base on land. All that is to say that economic platforms focused on creating economic justice are becoming replicable, as all investment models do. It's rocket science, and then it's modular off the shelf. This is a thing that could be modular off the shelf if you figure out how it works in multiple ways. I'm really excited about it because I see it as in Danella Meadows' how to inject your solution into a system. Look, what are the places? And the $20,000 match that validates a crowdfunder that gets them to actually be real. But getting to 40,000 in your network is hard. That you've picked a great systemic leverage point that I think is really interesting, that could fit in lots of capital stack ecosystems depending on what your fund is. So I'm imagining your future and I'm excited about it. Yeah, man.
Well, thanks.
So, yeah,
yeah, we've enjoyed it. It's been
yeah,
fun once again to work with Johnny again, and
yeah.
just to think differently about mobilizing people. That's what I've loved is the comments back from entrepreneurs specifically, that this was critical capital for them, and they're now able
It's
to
the critical
focus on their
inflection point.
business.
That's the
Yeah.
thing. Joe, I think we're about done. I really want to, my commitment after this is we want to publicize this. We'll put it on our newsletter. We'll get it on Michael Schumann's Main Street Journal. We also have really good distribution through Impact Alpha, and they've set up a database for us to do local funds.
Oh, great.
And we've got a whole database that they're keeping, and then they have lots of distribution. But I want to find the places where this can go. I think you figure out one place that you can figure out how that $20,000 match fits in, if you're the Atlanta Foundation or if you're the Chamber or whatever. So that's really fascinating. Well, Joel, I'm glad you were able to make it in from the other platform. Do you have anything you want to add or anything?
Yeah, no, and I was actually in there the whole time. I'm not sure why it wouldn't let you guys see me there. So
okay.
Yeah, no, I really think this model of a match for community fundraising is just such a no-brainer and win-win.
Right.
And so yeah, I absolutely love what you guys are saying. I am curious when it comes to, because it seems like there's a bit of a gap. You mentioned the Jobs Act in 2016. It's been a bit of a gap between all these things have changed and all these laws have made this easier, but getting it to mass or to just the general public where people know whether they're an entrepreneur or they're an investor, where they know that this is an option for them is there's definitely a gap there. So I hope that this helps with that, but I'm wondering if you guys have any other kind of strategies or ways that you're going about addressing the point to where it's something that, I know it's brand new, but to the point where entrepreneurs actually know that this is an option for them.
Yeah, this is kind of my job, right? I lead the fundraising team at WeFunder. So basically our team is trying to get the word out to entrepreneurs far and wide, whether that's a Series B tech startup like a Replit or a Substack, or whether that's a coffee shop in, Asheville, North Carolina, that's looking to raise 50K to, open up or expand to a second location, whether it's an equity deal, whether it's a debt deal. And yeah, as you say, Joel, I feel like awareness of this as a fundraising option is still very limited. The Jobs Act passed Congress in 2012. It was rolled out by the SEC in 2016. It was kind of improved in 2021. So we're still in the really early innings. If you look at the dollars of community round capital deployed every year as a percentage of venture capital and angel dollars, it is growing. And yeah, our team's job is how do we accelerate that growth? Obviously, we think these matching funds can be one vehicle for accelerating that, as well as, WeFunder growing our team, our business development marketing team, us starting to, deploy dollars on marketing. And, the cool thing in our model, it's like a two-sided marketplace. The more startup founders that we have who raise capital on WeFunder, like when Substack launched, they sent an email to probably 1 million people saying, hey, we just launched our WeFunder community round, check it out. And they created probably 8,000 new WeFunder investors that day. To invest in Substack. So they're kind of like our growth engine, and it's then and then some of those investors in Substack might be entrepreneurs themselves, and so the flywheel is starting to build momentum now, but it's still the really early innings. And it's always frustrating. We want to accelerate the growth more and more.
Yeah.
So.
Well, and that's where the match fund, the partnership, is really helpful, because we're on the ground. We're actually socializing it. We're all of our entrepreneurial support organizations know about it, and they're pushing people to it. So it becomes this flywheel effect. And we've had Johnny up, and we do kind of founder meetups and just answer questions. Then people that have raised before, they're championing it. So I think that you start to see, oh, wow, that was not as hard as I thought it was. It actually was super helpful. The encouragement that I got from the community was better than I've ever received from investors in the traditional sense. So I think you get a ton of advocates and champions for your cause, your business, your community. And so, but you're right, it does require some thoughtfulness and education and awareness and ultimately, I think we've gotten to that point, that inflection point where if you're in Louisville, Kentucky, and you're raising capital, you know about the community around, and
Right.
you're angling for that as a part of your capital stack.
Right.
So then is the way to grow the funds, is it, if my understanding, just for clarity's sake, is it to grow the fund that you've started there in Louisville that can then do this around to different areas and to different industries, or is it to facilitate the connections between a fund and the community investing, like funds that already exist?
You know, the path could be both and. Our original thought
Mhm.
was just to inspire other communities and
Right.
to open source kind of what we've learned. We would be happy to work with people that would be interested. We have a pretty creative vehicle. Access Ventures
Mhm.
is structured as a 501c3, so we can get actually pretty creative in how we think about these things. But it was initially just to say, hey, there's a lot of groups out there, I think, like us that that care about place, care about community, and have dollars. And here's a way we could potentially inspire them to think differently about
Right.
supporting community and getting capital moving. So, yeah.
Yeah, that's great. No, I like the vehicle and I like the example. I think that's awesome. Thank you guys for your
This
time.
is, yeah, the $20,000 match inflection point is just that's great. I think I want some bumper stickers, John. And I'll put them on every car that I see. You know, if I'm in a parking lot, I'll say, ask me about the $20,000 match. Anyway,
I love it.
That's actually our secret weapon for how do we grow WeFunder and this concept of community rounds. It's called Project Send Bumper Stickers to Kevin.
Yeah, there you go. I love it.
Exactly. That's a good thing. Yeah, there's flaws in that. I mean, they wouldn't know what the heck, who put that in my bumper. That's another problem.
Exactly.
Yeah. Okay. Well, we can be a little more strategic. Thank you so much, guys. This is great.
Oh, this has been fun, Kevin.
We
Really
will
appreciate
put it on our newsletter on Main Street Journal, and then get it into Impact Alpha as well. And John and Bryce would talk about other ways to spread this thing.
Love it. Love it.
Thanks,
Well,
guys.
thanks for the time.
Appreciate it.
Appreciate you.
Okay.
Take care.
Good to see you. All right. Bye-bye.
Thank you, guys. Bye.